Hello, everyone, and a very warm welcome to this week's Major Markets Update for October the 1st, 2023. We are most likely in a smaller degree fourth wave. Question is, has it already ended because the upside target zones have been reached, or if it can become more complex because fourth waves are notoriously complex? We'll review some of the key levels that should not break to the downside to know that we are already in our much larger C wave that's going to break below the 2020 lows, or if we still can see 4800 before the countdown starts over again. Bottom line, short term, it's unclear if the fourth wave has finished because fourth waves can become notoriously complex. Note that the second wave was already aberrant, meaning complex and protracted. So this fourth wave may be short, sweet, and simple. Based on the rule of alternation, it's more a rule of thumb, not a strong hard rule where like wave 2 cannot go below the start of wave 1. So simply put, below last week's low, wave 4 completed, and wave 5 is on the way to about S&P 500 4220, 4210. We go above Friday's high. This fourth wave is becoming more complex. How the market is going to react to the news that the government shutdown has been temporarily avoided, I don't know. We'll see based on price action. Is the market going to like it? I don't know. Meanwhile, as long as we stay below 44.01, the pressure remains down, and we should expect this final fifth wave lower. Bigger picture-wise, the market approached our target zone that we set forth last year in October this summer. By then, there was no way to know if we were seeing the long-term wave B top, or if the current decline would only be a corrective pullback, a fourth wave, setting up for another rally to 4800 from where this countdown could start again. I cannot tell you the difference at that stage. We have a preferred one and an alternate one. One of the two is going to be confirmed. So we can still maintain this last perspective, the second point. But the market is really pushing us to the limit on this edit wave count because I really would have liked to see 4274 hold and not get us all the way already to the bottom end of the target zone, which was 4230. So over the coming weeks, I think the market will have to make an important decision. Either this larger B wave has been struck, and I think we'll get that indication if we drop below 4180, or indeed we are in this fourth wave bounce, a smaller one, drop one last time to not below 4205, and then we rally to 4800. If you go below 4205, first warning, long term for the bulls. Below 4180, second warning. Below 4165, lights out. Very simple. So we are at a major inflection point. But remember from previous update, we still have not seen 5 larger waves down. This is the primary perspective we have been tracking since 2022. So far, so good. It would mean that we're now in wave 1 of this blue wave C. We'll get to wave 2, and then the 3, the 4, the 5. We have not seen wave 1 complete. We have not seen 5 waves lower. As I said in the previous video, bears, hold your horses. We're not there yet, but getting close. We're being indeed pushed to the limit on the wave count for here, that we are only in the fourth wave, we get a fifth wave, and then the market can decide, is it all of wave B again or not? Okay, so please keep that in mind. As you can see here, we're getting awfully close. Below 4185, it starts to get really complex. Below 4165, 4130, it slides out. All right, so let's move on straight to the charts. We'll start off with the regular NASDAQ. We bottomed on Wednesday in the ideal target zone for extended third wave. Wave 2 topped in the ideal wave 2 target zone. Wave 3 so far extended. Extensions can always happen, but cannot be known beforehand. We have a little bit of positive divergence. And then on Friday, as you can see, we topped exactly in this ideal fourth wave target zone. And we ran into resistance, which is, I believe, the 10-day simple moving average, as well as this parallel trend line. No buy signals anywhere other than positive divergence, but positive divergence is a condition, not a signal. And from this perspective, I'm still missing a fifth wave. C waves are 9 out of 10 times 5 waves. Okay. Excuse me. Same for the regular, the NASDAQ 100. I'm still missing a fifth wave. As you can see here, the CSA extension, and this one has moved a little bit. So we have here wave A, wave B, and then you measure the CSA relationship. Targets about 14,200, and wave 5 here in gray would make that work really well. 1, 2, 1, 2, 3, 4, 3, 4, 5. As you can see here, wave 2 lasted 1, 2, 3, 4, 5, 6 days. Spiked just a tiny bit above the ideal wave 2 target, so still okay. And as you can see here, wave 4 has so far lasted about, I would say, half a day, plus other half a day. It's about 2 days, so it's technically enough from that perspective. Okay. Above, of course, Friday's high, this wave 4 is going to extend, and we might see a gap fill at about 14,950, I believe it is. Above 15,150, I believe it is, and then the impulse has already completed in an aberrant way. Wave 5 should then target somewhere between 16,140 and 16,660. The ideal wave 4 target zone was just reached on Wednesday, so nothing out of the ordinary here just yet. Okay, zooming in on the NASDAQ 100, as you can see here, we reached the almost ideal 161.8% extension for this orange wave C, which could indeed be all of the gray wave 4, right? Could be all of gray wave 4, or we're going to subdivide one more time. I must say, though, the decline on the 5-minute chart, although it's not my preferred way of wave counting, has 5 waves lower from Friday's high. 1, 2, 1, 2, 3, 4, 3, 4, 5. Okay. So far, it looks pretty good. I can make 5 here as well, and this is some ugly weird. Then we got a almost 50% retrace into Friday's close, and we dropped. That was not a strong close. So technically, we've done enough. 3 waves higher with a 5-wave C wave. 1, 2, 3, 4, 5. But this could be A of wave 4. We're now working on wave B, and this is A of B, B of B, C of B, and then another rally. It's very possible. Okay, 4th waves can be notoriously complex. Thus, we go below the 27th, September 27th low, 14,440-ish. Then the 4th wave completed. We go above, of course, Friday's high. The 4th wave continues. As long as we then remain below 15,150-ish. Moving on to the hourly chart, you can see here as well, we reached just above the ideal wave C target zone for this wave 4. Also, the hourly chart looks rather impulsive. We break below, of course, this week's low, and then we're going to target 14,300, 14,445. Above 14,965, first warning for the bears. Above 15,135, the low is in place, but I really would like to see this CSA target zone, which matches quite well with this wave 5. Okay, so this is still the primary expectation. Alternative is then for this 1, 2, 3, 4, 5 of 3, 4, and 5 to make a larger impulse lower, and then the top of wave B is already in place. S&P 500, 5-minute chart. Also here, A, B, C higher into the ideal target zone that outlined on Thursday. Okay, nothing out of the ordinary just yet. We got a reasonably shallow wave B. Nothing out of the ordinary just yet, right here in the ideal wave B target zone. 5 waves up, 4 waves C. And then what counts reasonably well is 5 waves higher. Even here from this green 4 to the green 5, 1, 2, 3, 4. So pretty much here 4, 5 counts really well as 5 waves lower again. So 1, 2, 1, 2, 3, 4, 3, 4, 5. And then we got an almost 50% retrace. So technically we've done enough. But again, this could be A of 4. And we're now working on B of 4 and then C of 4 yet to come. Below, of course, 42.38, I believe it is, which is Wednesday's low. We're going to visit the 42.20s, 42.10s. We should really ideally stay above 42.05. above Friday's high, and we can go to 3350s. This is our primary preferred wave count, with definitely a very extended fifth wave of wave 3, an extended C wave. Okay, but we've reached our target zone, we're below resistance, and as long as we stay below 4401 and especially 4430, we should see this wave 4 complete and then a wave 5. But again, this wave 4 can become more complex, and this was only wave A. We're now in wave B. We're still going to get a wave C. Okay, it's still very possible. A, B, C. Alternatively, all of complete. We know break above Friday's high, higher, break below this week's low, and we're going to target here the 4200, 4230 zone. How high can we go on a break below or back above Friday's high? That would be somewhere around 4350 plus or minus 10. Nothing yet out of the ordinary. S&P 500 daily chart, also here an extended third wave. Top so far in the ideal wave 4 target zone. I still would like to see this wave 5 go to about 4200, 4205-ish, as you can see. For C is 1.236 times A. So then wave C for the S&P 500 becomes extended, but not necessarily for the NASDAQ 100 and not necessarily for the regular NASDAQ either. But that's okay. One extends, the other ones are quite typical. I think we still have a pretty reasonable, easy to understand market. Again, this wave 4 can become more complex. Previous wave 2 of the same degree was 6 days. So about 1 to 2 days for this wave 4 is a little short, but it doesn't have to be more than that. And again, a tag of the 200-day moving average, which is soon at about 4200, would be picture perfect. I have no buy signals anywhere. Pressure remains to the downside. This is then, of course, the bearish wave count 1, 2, 1, 2, 3, 4, 5, 3, 4, 5. Okay. We need to drop below 41.85 at a minimum to suggest this is the case. Below 41.65, lights out. Meaning I won't see any way to get us to 4800 anymore. This is the Dow Jones hourly chart. We knew if we would break below 34,000, we target then into the 33,000s. You can see here the extensions. Normally this wave C/3 would bottom at around 33,716, 161.8. You see my cursors. Well, we extended tremendously. And it looks like we're 1, 2, 3, 4, 5, 3, 4, and 5. The fourth wave should then ideally come here, but we're now dealing with a very extended wave. So also here, this wave 3 is very extended. It should normally have bottomed there, okay? Same as this wave 3. It didn't. So we are in a very extended third of a third wave / C wave. So then the fourth wave, of course, is not going to go this high either, based on the ideal Fibonacci-based impulse pattern. We have an aberrant impulse pattern. It's okay. So then we should see a wave 5. If we drop here below this week's low, I think we're going to target the low 33,000s for wave 5, C/3. Then the question is, are we going to see a 4 and then a 5 for this, right? That's the path we're tracking. I can't tell you just yet. We have a very extended third wave lower, and I would really like to see this 3, 4, 5 pattern develop. That would match very well with the daily chart as well. The wave count 1, 2, 1, 2, 3, 4, 5, 3, 4, 5. Okay, matches really well. Semiconductors already topped where they should for wave 4. We got 34.81. Ideal target would have been 34.55. We drop, of course, below this week's low, and I think we can target 32.60, 32.15 for the wave 5. Also, this one still seems to lack that fifth wave lower. That's what I'm missing. We bottomed here at the ideal wave 3 target, so we've reached the ideal wave 4 target. So far so good. And we had a ending diagonal gray wave 5. So far so good. Everything so far aligning pretty well. Note here the negative divergence, higher high, right, on less strength. So then this was A, B, C. I like it. Also here, the daily chart for the semiconductors. Another wave 5 to about 3,200 would be ideal, maybe 3,250. And then another rally to the 200% at about 4,000. Picture perfect. But if we go below 3,150, odds really increase that the B wave has already topped here in July. Okay, so please take that into consideration. IWM, on the other hand, would match with another strong rally for the other indexes, in that also here we would need another ideal wave 5 lower to complete E of B, and then a CSA extension would target all the way to the low 200s there. So then we have A, B, C, D, E. All right, this is our alternative wave count versus the preferred one. We're going to complete CSA here at about 174. We might have completed already this week, but would look better, as I showed you, with a final wave 5 lower. And not stall at this secondary trend line in blue, and then back to 196. So regardless, there's quite a juicy upside potential. Right? This is about 20 points upside potential versus about 2 points downside risk. Or we could even see from here about a 30 to 40 point upside potential versus a 2 to 3 point risk. Market breadth wise, getting quite oversold, but not really yet on the bullish percent index of the S&P 500. Getting close, below 30 would be picture perfect, because if we then get a reversal from below 30, above 30, also really good that the low is in place. The AD line continues to not make new all-time highs, still not in a bull trend. This is still not a bull market according to the AD line. New lows definitely fell off a cliff. That's a good sign. Still too high, but as you can see here, it seems like we're starting to exhaust a bit to the downside. We do have positive divergence on the McClellan oscillator for the Nemo. As you can see here, we're making a lower low in price, but a higher low in market breadth. That's a good sign. And we bottomed once again in the ideal buy zone. The same here for the S&P 500, but I already pointed that out earlier this week. That's a good sign. So that should give the bears pause. But divergence can last a while, as you can see here, almost a month before it finally kicks in. So it doesn't have to be already the signal, but it is definitely worth noting. Also, the summation index now is getting quite oversold again. So also here, at a minimum, a bounce should be expected, in the sense that we could see either the 4-5-4-5 bounce, right? So this 4-5-4-5 bounce, or we will see 4-5 and then 4,800. Because even this bounce here, the red wave 4, will be quite strong. Please keep that in mind. How are we doing on sentiment? Oh, sorry, there we go. So this one's getting quite oversold. So the ebb is getting close to its end, but I have no sign that it has ended yet. Also here you can see just on closing prices that we've done 5 waves lower. 1, 2, 3, 4, 5. That is good. But since this is most likely C wave, we still need a larger 4, larger 5. Right? 1, 2, 1, 2, 3, 4, 5. That's a 3, 4, 5. We did get a buy signal on Thursday for the PMO buy all sell all indicator, but no follow through just yet. It stalled out on Friday, but it is an initial buy signal. We could see something like we saw here in March. Right? That was also a 4th wave and then a 5th wave, as you can see. 1, 2, 3, 4, 5. Similar here in December, got a buy signal, then a drop. Okay. Same here in October, got a buy signal, then a drop. So please keep that in mind. We don't necessarily have put in the low already, but it's also a better sign for the bulls and a worse sign for the bears that things are starting to bottom out. How are we doing on sentiment? Definitely low exposure for active money managers, 43% exposure, but it is a higher exposure than we had in August. So maybe they are also sniffing out a bottom, but definitely underexposed, not overexposed in the markets. Put call ratio is neutral. It has been quite high, I must say, over the last month. So that is a also a contrary signal. As you can see here, the 21-day exponential moving average of the put-call ratio is also quite high, so that's also a good contrarian signal. Another contrarian signal is the AAII Investor Sentiment Survey. It's a 27% bulls, 40% bears, which is quite high. And as you can see here, bullish sentiment has declined over the last month, quite nicely in line with the stock market, and bearish sentiment has increased. So this is also starting to show a bottom from a contrarian perspective, though the numbers are not too low or too high from bull bear respective perspective to make any conclusions about this. We need readings the 50s for the bears. That's about 2+ standard deviations away from the norm. So all we can say here is definitely sentiment is getting bearish, but no washout yet, though the fear and greed index is now at levels that coincide with the March 2023 low, the December low, and October low. And I can show you more about this here when we overlay those lows with the price chart. You can see it matches quite nicely, right? You can see that matches quite nicely. But it's a condition, it's not a trigger. It doesn't have to be exact lows. All right. Also here in October last year, market did make a lower low before it finally bottomed. Same here in January and March. So this is getting pretty bearish out there from a fear and greed perspective. So that's the bigger picture wise. We really need to hold 41.85, 41.65 to consider this rally to 4,800. Otherwise, it falls off the cliff. So here is then some work at wavetrader.net, and always good to track what other people are seeing. Indeed, this could be all of wave 4, and we're now in wave 5. Okay. Alternatively, this is A of 4, B of 4, C of 4 for a more protracted, complex, double type of fourth wave. Wouldn't surprise me if that's the case. So please keep it in mind. I just can't discern between the two. Of course, again, below this week's low, and wave 4 has completed. Above Friday's high, wave 4 is going to continue. So that's what our friends see at wavetrader.net. And the same with our dear friend Pretzel. He also would like to see another 4-5. But he says we could see an A, a B, and a C back up, all the way back up to 4,500. But I think the general gesture here is a 1, 2, 3, 4, 5 as well. A little bit lower. This is, I believe, the NYA to about 15,000. That matches quite well with about 4,200, I believe, for the S&P 500. So also here we have the same wave degree. That's the nice thing, that we are now most likely in this wave 4. Okay, we count 5 waves lower, C/3, but C waves, as Pretzel also recognizes, are most often 5 waves. So we should be in a corrective 4th wave bounce. All right, that is all I have for today. Thank you so much for listening. Thank you so much for being a valued premium member. Take care, trade safe, and I will catch you all next week.